Let's start with the review of the industry. The first one is construction industry. Do you know that construction industry is playing a vital role in enhancing and developing one's country, especially in economy parts? There are three categories of construction. The first one is building construction, such as farm and residential. The second one is heavy construction, such as highways and bridges. The third one is special trade construction, such as painting and plumbing. Now, let's move on to the second industry, which is consumer product industry. Consumer product industry is company manufacturing and selling items that is purchased by individuals or households for their own use and enjoyment. This type of company can involve with food production, clothing, beverages, and packaged goods. The companies that have been chosen for this project are Gagasan Nadi Sergas Berhad and F&N Holdings Berhad. Let's see the background of Gagasan Nadi Sergas Berhad first. Gagasan Nadi Sergas Berhad was incorporated in 1999 by an experienced team of industry veterans. The company is listed on ACE market of Bursa, Malaysia. The company is doing various businesses, such as construction, concession and facility management, utility services and property development. The company's mission is transforming the landscape and constructing buildings in multiple locations nationwide. The company's vision is transforming tomorrow today. Now, let's check out F&N Holdings Berhad's background. F&N Holdings Berhad was founded by John Fraser and David Chalmers Neave in 1883. The company was listed on main market of Bursa, Malaysia. F&N brand is generally known with high quality and halal compliant food and beverage. The examples of the leading brand of F&N Holdings Berhad are 100 Plus, F&N Seasons, F&N Nutri Soy, F&N Ice Mountain, Oyoshi, Rangers and Estcola. The company's mission is to provide superior returns to the shareholders, excellent value for their customers, and a rewarding career for their employees. The company's vision is to become the leading total beverage company in Malaysia and the region. Now, let's see the differences between Gagasan Nadi Sergas Berhad and F&N Holdings Berhad in terms of financial reporting standard, which are MFRS 15, MFRS 2, MFRS 119, MFRS 126, MFRS 7, MFRS 9 and MFRS 132. The first financial reporting standard is MFRS 15 Revenue from Contracts with Customers. MFRS 15 was issued in September 2014 with the original effective date of 1 January 2017. MASB confirmed that the effective date of MFRS 15 will be deferred by 1 year. However, early application of MFRS 15 is still permitted. Gagasan Nadi Sergas Berhad has adopted MFRS 15. Revenue from construction services is recognized over time, in the period in which the services are rendered, using the input method. Revenue is determined based on the proportion of construction costs incurred for work performed to date over the estimated total construction costs. Transaction price is computed based on the price specified in the contract, and adjusted for any variable consideration such as incentives and penalties. If the construction services rendered exceed the payment received, a contract asset is recognized. If the payments exceed the construction services rendered, a contract liability is recognized. What is the effect of adoption of MFRS 15 to F&N Holdings Berhad? With the adoption of MFRS 15, certain consideration payable to customers which are currently recognized as expenses would be required to be recognized as part of the transaction price, and hence to be reclassified to net off against revenue. This reclassification is expected to reduce revenue by 6%, while operating expenses is expected to reduce by 24%. There is no impact to profit before tax. The group has established a steering committee and a cross-functional project team comprising members from the finance function, commercial operations and other relevant functions. In order to manage the implementation of MFRS 15. The second financial reporting standard is MFRS 2 share-based payment. This standard is widely used by companies to reward shares and share options as significant portion of remuneration of the employees, especially the senior personnel. There are two types of share-based payments, which are equity-settled share-based payment and cash-settled share-based payment. Equity-settled share-based payment is when the employees provide service and company gives them his equity shares or other equity instruments. Cash-settled share-based payment is when the company pays cash payment to employees for his duty, but its price will be based on the share equity of company. For Gagasan Nadi Sergas Berhad, MFRS 2 does not have any material impact on the group's financial statements. On the other hand, in F&N Holdings Berhad, the grant date fair value of share-based payment granted to employees is recognized as an employee expense, with a corresponding increase in equity over the period that the employees unconditionally become entitled to the awards. Meanwhile, for share-based payment awards with non-vesting conditions, the grant date fair value of the share-based payment is measured to reflect such conditions, and there is no adjustment for differences between expected and actual outcomes. Next is MFRS 119 Employee Benefits. The standard prescribes the accounting and disclosure by employers for employee benefits. It replaces MASB-approved accounting standard IAS 19, accounting for retirement benefits in the financial statements of employers. There are 5 categories of employee benefits. The first one is short-term employee benefits, such as wages, bonuses and SOCSO. The second one is post-employment benefits such as pensions and post-employment insurance. Third is termination benefits. Fourth is equity compensation benefits. And the last one is other long-term benefits such as long service leave and sabbatical leave. Let's talk about the next financial reporting standard, which is MFRS 7 Financial Instruments Disclosure. MFRS 7 was originally issued in August 2005 and applies to annual periods beginning on or after the 1st of January 2007. This standard requires disclosure of information about the significance of financial instruments to an entity, and the nature and extent of risks arising from those financial instruments. The financial instruments must be disclosed in both qualitative and quantitative terms. Specific disclosures are required in relation to transferred financial assets and a number of other matters. There are 2 types of risks involved, which are currency risk and interest rate risk. Currency risk arises from the change in price of one currency in relation to another. Interest rate risk is the risk that the fair value or future cash flows of a financial instrument will fluctuate because of changes in market interest rates. Let's see how Gagasan Nadi Sergas Berhad disclose its financial instrument. Under currency risk, the group does not have any transactions or balances denominated in foreign currencies and hence, is not exposed to foreign currency risk. Under interest rate risk, the group's exposure to interest rate risk arises mainly from interest-bearing financial assets and liabilities. The group's policy is to obtain the most favorable interest rates available and by maintaining a balanced portfolio mix of fixed and floating borrowings. The group's fixed-rate receivables and borrowing are carried at amortized cost. Therefore, they are not subject to interest rate risk as defined in MFRS 7. Since neither their carrying amounts nor the future cash flows will fluctuate because of a change in market interest rates. For F&N Holdings Berhad, the group is exposed to foreign currency risk on cash and cash equivalents, sales and purchases that are denominated in a currency other than the respective functional currencies of group entities. The currencies giving rise to this risk are primarily United States dollar and Singapore dollar. Risk management objectives, policies and processes for managing the risk. The group hedges a portion of its foreign currency denominated trade payables. The group uses forward exchange contracts to hedge its foreign currency risk. Most of the forward exchange contracts have maturities of less than 1 year after the end of the reporting period. Where necessary, the forward exchange contracts are rolled over at maturity. Meanwhile, in interest rate risk, the group's investments in fixed-rate debt securities and its fixed-rate borrowings are exposed to a risk of change in their fair value, due to changes in interest rates. The group's variable-rate borrowings are exposed to a risk of change in cash flows due to changes in interest rates. Investments in equity securities and short-term receivables and payables are not significantly exposed to interest rate risk. Exposure to interest rate risk. The group has no exposure to significant interest rate risk as the fixed-rate debts were entered into by the group in order to minimize cash flow risk. However, the company has exposure to interest rate risk from its loan to a subsidiary. Let's move to MFRS 9 Financial Instruments, Recognition and Measurement. MFRS 9 Financial Instruments sets out the requirements for recognizing and measuring financial assets, financial liabilities and some contracts to buy or sell non-financial items. The major changes introduced in MFRS 9 are classification and measurement of financial assets and liabilities, impairment methodology and hedge accounting. How Gagasan Nadi Sergas Berhad recognize and measure its financial assets. The group has applied MFRS 9 retrospectively. It is not to restate comparative information of its financial instruments. Financial asset at fair value through profit or loss were stated at fair value at each reporting date, with any gain or loss arising on remeasurement recognized in profit or loss. For loans and receivables, the group has applied MFRS 9 retrospectively. It is not to restate comparative information of its financial instruments. Unquoted trade receivables and other receivables with fixed or determinable payments were classified as loans and receivables financial assets. It is measured at amortized cost using effective interest method, less any impairment loss. Interest income was recognized by applying effective interest rate except for short-term receivables when the recognition of interest would be immaterial. In Gagasan Nadi Sergas Berhad, wages, salaries, paid annual leave and bonuses, are measured on an undiscounted basis. It will be recognized in profit or loss in the period in which the associated services are rendered by employees of the group. In F&N Holdings Berhad, short-term employee benefit obligations in respect of salaries, annual bonuses, paid annual leave, and sick leave, are measured on an undiscounted basis, and are expensed as the related service is provided. The fourth financial reporting standard is MFRS 126 Accounting and Reporting by Retirement Benefits Plans. This standard deals with the accounting and reporting of retirement benefit plans by the entity managing the plan to all participants as a group. There are two types of retirement plans. The first one is defined contribution plan. A retirement benefit plan is classified as a defined contribution plan if the amounts to be paid as retirement benefits are determined by contributions to a fund together with investment earnings. Employees do not have to contribute their portion of the salary to the plan. It is funded entirely by the employer. Employer-sponsored is called fund investment. The second one is defined benefits plan. Defined benefit plans are post-employment benefits other than defined contribution plans. A retirement benefit plan is defined when the amounts to be paid as retirement benefits are determined by reference to a formula usually based on employees' earnings and/or years of service. It is the employer's obligation to provide the benefits to current and former employees who participate in the plan. How Gagasan Nadi Sergas Berhad recognize the retirement benefit plan. For contribution plan, the group's contributions to defined contribution plans are recognized in profit or loss in the period to which they relate. Once the contributions have been paid, the group has no further liability in respect of the defined contribution plans. For benefits plan, the group has not applied in advance the following accounting standards and/or interpretations that have been issued by the Malaysian Accounting Standards Board. About F&N Holdings Berhad? For contribution plan, the group's contributions to statutory pension funds are charged to profit or loss in the financial year to which they relate. Prepaid contributions are recognized as an asset to the extent that a cash refund or a reduction in future payments is available. For benefits plan, certain subsidiaries of the group operate unfunded defined benefit plans for its employees. The plans pay a lump sum amount, instead of a pension, at retirement. The calculation of defined benefit obligations is performed annually by a qualified actuary using the projected unit credit method. Now, let's see how F&N Holdings Berhad recognize and measure its financial assets. The group does not expect that the application of new classification requirement will have a material impact on accounting for its financial assets. Financial asset at fair value through profit or loss were stated at fair value at each reporting date, with any gain or loss arising on remeasurement recognized in profit or loss. For loan and receivables, financial assets with fixed or determinable payments that are not quoted in an active market are classified as loans and receivables. Financial assets categorized as loans and receivables are subsequently measured at amortized cost using the effective interest method. An impairment loss in respect of loans and receivables is recognized in profit or loss, and is measured as the difference between the asset's carrying amount and the present value of estimated future cash flows discounted at the asset's original effective interest rate. The carrying amount of the asset is reduced through the use of an allowance account. The last financial reporting standard is MFRS 9 Financial Instruments Presentation. This standard outlines the accounting requirements for the presentation of financial instruments, particularly as to the classification of such instruments into financial assets, financial liabilities and equity instruments. The standard also provides guidance on the classification of related interest, dividends and gains, losses, and when financial assets and financial liabilities can be offset. How Gagasan Nadi Sergas Berhad present its financial instruments? All financial instruments should be presented in the company's statement of financial position. However, financial assets such as dividend income should be presented in statement of profit or loss. Other than that, financial assets will be categorized as asset, financial liabilities will be categories as liability and equity instruments will be categorized as equity. How about F&N Holdings Berhad? All financial instruments should be presented in the company's statement of financial position. Financial assets such as loans and receivables will be categorized as asset while financial liabilities will be categorized as liability. CSR is a type of international private business self-regulation that aims to contribute to societal goals of a philanthropic, activist or charitable nature, or by engage in or support volunteering or ethically oriented practices. For Gagasan Nadi Sergas Berhad, as part of engagement with the community, the group in collaboration with the National Blood Bank conducted for 2 days of blood donation activities. More than 100 employees of the group participated in the blood donation events held at the group's head office and at the project gallery of Antara Residences, Putrajaya. During this event, a total of 66 blood units were donated. Then, the group make an engagement with the employees because employees are their pillar for the group's successful journey. Their knowledge and skill set are the group's greatest assets and always ensure their welfare, well-being and safety are taken care. The activities that held with employees are bowling day out, fun hiking, badminton hiking and durian party. Thus, CSR creates an impact on employee attitude and level of awareness. Then the company awarded financial incentives to 3 children of staffs who achieved excellent results. In addition, the company awarded to the staffs who have served for more than 15 years. In addition, the company awarded to the staffs who have served for more than 15 years. 100 Plus has been the official isotonic drink of the Badminton Association of Malaysia for more than 10 years. Supporting national circuit championships and all tournaments and events hosted by BAM. It has also supported the Football Association of Malaysia as the official drink sponsor for close to 10 years. F&N Holdings Berhad honored 156 children of its employees with over earned 260,000 at the 12th Chairman's Award. The annual award scheme is aimed at fostering a caring work environment and harmonious employer-employee relationships. The F&N Empowering Lives Through Education program, in collaboration with Qasim Chin Humanity Foundations, provided children from 600 poor households with free tuition classes. The F&N-ELITE was established to empower underprivileged children and their families to rise above their conditions and strive for a better future. F&N Holdings Berhad Save RC's worked with the Redang Resort Operators Association. F&N Holdings Berhad provided several resort operators with 60 recycling bins, educational posters and collaterals to promote awareness about responsible behaviors towards marine conservation, recycling and proper waste disposal among tourists. For the last, we will see the environmental issues for both Gagasan Nadi Sergas Berhad and F&N Holdings Berhad. In Gagasan Nadi Sergas Berhad, the group had established several initiatives to protect the environment. The first one is the project features a sky garden on every floor to create a green and sustainable environment that brings residents closer to nature. Second, the company regularly monitored soil exposure during construction activities. Third, the company organized a dengue awareness program together with Majlis Perbandaran Klang at work sites and workers' quarters. Fourth, the company established proper procedures to manage scheduled waste disposal and ensure scheduled wastes are disposed by licensed contractors. Fifth, the company promoted the use of T5 low-wattage lights, 14 and 28 watt, for indoor lightings to save energy consumption for the students' residential college at IIUM. The last one is the company also allocated 3 units recycle bins for the Mahala Green Project campaign which commenced on the 29th of January 2018 for students' residential college at IIUM. Let's see the environmental issues regarding F&N Holdings Berhad. Firstly, F&N Holdings Berhad has been partner with schools in Malaysia since 2007 to educate the next generation on the importance of recycling and promote the preservation of the planet. Next, as part of their materiality assessment, they have identified 3 main issues in relation to their eco-efficiency efforts, which are water stewardship, effluents and waste, and energy and climate change. And the last one, F&N Holdings Berhad uses innovative packaging to minimize their environmental impact and meet consumers' demand.